Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta and we're talking about metals right now because there is certain pressure that we've seen into this segment. All the metals, especially the non-ferrous ones, are trading on the lower side of the range, and that is because the US inflation data is still on the higher side. You have the dollar index, which is still trading at a 3-month highs, and that is weighing onto the markets. Joining us now is Kunal Shah of Nirmal Bang to discuss further on what can be expected from this sector going forward. Kunal, hi, thank you so much for joining us. The US Fed future funds now believe that there is just about less than 50% probability of a rate cut even in the month of May. Would you say that the metals at this point in time have digested this?
I think the way metal prices have gone down in last 1 month. So two things. It started with weakness in China. The broader outlook of Chinese economy continued to worsen. And the second part is the stronger than expected economic data from the US. So that has led to a consensus in the market that the interest rate cuts are going to be less aggressive in the year 2024 and they are going to be slightly prolonged. But I think most of these negative news has been already factored in. The way the prices have corrected, you've seen almost 8 to 10% correction in zinc, lead, that kind of metals. We've seen good correction, 5%, 6% correction in the price of copper, almost 6%, 7% correction in the price of aluminum. Remember, we are at that stage where from the supply side point of view, there is a shortages developing on the concentrate front in many of the base metal complex. So this recent fall doesn't make a lot of sense to me. And as far as the US interest rate cuts are concerned, well, I think they are imminent. So there is no doubt in my mind that we are not going to see rate cuts. The rate cuts are on the cards. Maybe they may be less aggressive, but that's not the point. The point is there is going to be a reversal in interest rate cycle in the second half of this year, and that itself is a positive reason for us to believe that metals, the downside is very limited from present levels.
Comment on copper especially, and we are down nearly 5% in the month of Feb alone, and there are reports that there is new deposit that have been found in Zambia. So everywhere that you look, whether it's about inventories, prices, new finds, new capacities coming up in this year and the next as well, how far do you see copper prices moving from here?
We've seen almost 20 days back, China has come up with a statement that the smelting capacity in China is going to witness a sharp cut going forward. So there is an excess capacity on the smelting front in China that needs to be curtailed. But the concentrate front is pretty tight when you look at the global picture. So even though China, the concern major here is the Chinese demand. I'm not expecting the Chinese demand to go up even by 2%. We are not going to see a 2% demand growth in China's copper demand. So that is a big worry for the market. But in other economies like India, other countries, there we are going to see demand growth taking place exponentially. So India's copper demand growth is going to be 8 to 10%. So some of the loss which we are going to see from the Chinese copper demand growth is going to be made up by countries like India. And from that front, demand side doesn't look quite alarming. Supply side on the concentrate front, tighter. And if the smelting capacity goes down in China, then I think the markets will gradually improve, and the prices will start to move up post March or April. So this fall from here, 5-10 rupees downside, should be used as a buying opportunity. Most of the negatives are priced in, and I'm not very bearish on base metal complex.
But you don't expect the metal prices to gain in this quarter. I mean, when you say that you expect the prices to gain up only by March or April, so this quarter is something that you will have to let go of. And that's about copper. Would you say the same about aluminum and zinc? Because here as well, we're looking at prices at multi-week and multi-month lows. Inventories are just surging on LME warehouses.
Yeah, so as far as the LME inventories are concerned, the magnitude of inventory which is going up is very small as compared to the size of the aluminum or zinc market, because 1 lakh, 2 lakh, 3 lakh tons of deposit is not going to make significant difference in a 25 million tons of market of copper or 70 million tons, 75 million tons of market of aluminum. So this kind of inventory gain is very minuscule, and I don't think so it's going to have a very sustainable impact. It's just there is an absence of any bullish trigger in the market. So for copper prices to move up, we require some trigger, like reversal in the interest rate cycle, stronger growth from China, stronger growth in other parts of the world. So none of these things are happening right now, and all of these negative are already priced in. So the moment we get indication that, okay, fine, after 2 months, 3 months, we are going to see a reversal in interest, some of the data starts softening, and I think that immediately market will witness major short covering. So I don't recommend to go shorts at these levels, and I believe that the downside is really very limited from here. Maybe 3 to 5%, nothing, not even 3%, 3 to 4% maximum in the case of zinc and aluminum. And as far as copper is concerned, hardly 2 to 3%.
Well, that's about metals. And what would you say about the precious metals, Kunal? Because this is another area which has seen only profit taking in the month of Feb. We're trading at around 2 to 3 month lows in case of gold. Silver as well seems to be flirting with that $22 per ounce mark.
Yeah, so I'm just trying to decode the inflation data which came. 3.4 was the previous reading on the YOY basis. 3.1 was the actual reading. Expected was 2.9. I mean, it has come down from 3.4% to 3.1%. Maybe it will go down to 2.9%. Even if it doesn't reach 2%, we are down from 9% to 3%. And we are not going exponentially up to 4, 4.5%, 5%. So I don't think so. It's all about inflation data. At some point, some of the Fed members will come and say that, look, 2% inflation doesn't look achievable. But even in spite of that, we believe that rate cuts are required, because the US is having a huge amount of public debt, huge amount of government debt, corporate debt. It cannot just keep this interest rate high at 5.5%. At some point, something will break. So I think irrespective of what data comes, whatever happens, maximum till March, precious metal can remain subdued. And I see a rally picking up in April, expecting rate cuts going forward. Even though smaller, maybe 25, 50 basis point of rate cuts or quarter basis point rate cut throughout the year 2024. But that itself will lead to a weaker dollar and higher bullion prices. So this 1 month is an opportunity. Maximum downside on COMEX gold looks 1960, 65. Silver $21.5, 3-4% from here. But the broader call it's not very bearish. This 1 month remains accumulating zone, and you will definitely see reward going forward. So buy at dips is my view and strategy to all, rather than just following the trend.
Okay, Kunal, one final question. If there is a money portfolio that you wanted to assign to metals, as you said, copper is expected to decline less, aluminum, zinc slightly more, and much of that decline perhaps would only happen until the month of March. If you had to divide your money, allocate it, how would you want to do it within metals itself?
Okay, so if I have to deploy 100%, I will put 35 to 40% in copper. Second, I will put in aluminum. Third in zinc, fourth in lead. So that's how my 30 to 40% will remain in copper.
All right. And when it comes to precious metals, how would you want that?
Precious metals, I think the risk rewards are favoring more towards silver. So 60 silver and 40 gold.
Kunal, thank you as always. So, well, that's exactly how you need to be playing your metal markets going forward. Until March is when you could be looking at some declines, but these are buying opportunities, as Kunal rightly says and reiterates, as many other experts also seem to be suggesting. Going forward, it's going to be strong year ahead for metals, especially precious metals, especially in case of silver, where that is where you could see good returns coming in.